straight in, please, to the minutes of our last meeting, which was the 4th of February. Does anyone have any observations to make with regard to the minutes? Okay, well, I'm going to take those. We'll take those as unanimously agreed then, please. Thank you. I don't have any urgent business. I don't know of any need to divide the agenda. Members, do you have any declarations of interest, please? Okay, fine. Then we will now go on to item 5 then, which is the audit progress report and sector update, and that's Jackson, isn't it? Thanks, Jackson.
Thanks, Chair. Good morning, everybody. So I'll quickly run through the report in front of you on the agenda. It's the same format as our normal progress report, in that we give some audit progress in the first part and then some sector updates in the second part of the report. In terms of our audit progress for the 2021 financial year, you'll see on page 10 of the agenda packs, we've begun the planning for our 2021 audit now. The team have been undertaking that work over the last few weeks and liaising with the finance team to gain the documents and understanding that they need. We set out some of the planning work that we undertake on page 10 of the agenda pack in our report. So that's on track, that's progressing as expected. And the outcome of that will be the formal audit plan, which we will circulate to yourselves as members and include for information again on a future committee agenda. We also set out on page 10 of the committee pack the value for money responsibilities that we have. I'm going to not cover that just now, and I'll cover that slightly later in the report if that's okay, because the value for money arrangements for the 2021 financial year are different to those that you're maybe used to from previous financial years. So I'll spend a little bit of time just covering those. Over the page on page 11, the other piece of work that we undertake for the council and that we've concluded since the last audit committee is the certification of the housing benefit subsidy claim. So that's undertaken on behalf of the Department for Work and Pensions, and we certified and completed that piece of work the 29th of January. That was in accordance with the revised national timetable. So normally that work would be completed by the end of November. Due to the impact of COVID-19, the department moved the reporting deadline for that to the end of January. So we certified that claim in accordance with that new deadline. A bit of context of that, there were some minor errors identified by the authority during that testing. We checked those errors and confirmed that the authority's conclusions were appropriate. The overall adjustment to the claim was just a classification adjustment, and it was just over £15,000. That's on a total subsidy claim of £16.9 million, to give some context. So that is a very minor adjustment in the grand scheme of the authority's overall return. And the authority's report sent to the Department for Work and Pensions was one of the cleanest, one of the shortest that I issued this year. So again, credit to that team and the work that they're undertaking, especially given some of the challenges they've had with COVID and the distribution of COVID grants, etc. So a positive outcome that's been certified. The department haven't come back to us with any comments or queries on that piece of work. And also in February, members of the finance team attended our financial reporting workshop, so that sets out any changes and sets out some of the latest financial reporting requirements in advance of the year end, so that they can produce the draft accounts that they're currently working on to the latest guidance. Over the page on page 12, that sets out a bit of a summary of the planned audit approach for 2021. So we've got the progress report here at Audit Committee. As I said, the interim audit has started. It's currently underway, so we've got that March and April. There's another committee, 17th of June, which will bring the audit plan to, and then our year-end work in August and September. The final audit committee dates aren't yet confirmed, which is why it shows as TBC, but we would expect, and what we're working to is that our audit findings will hopefully be presented to you at a committee towards the end of September. And in terms of our work, we've set this out further in the audit plan, but we'd expect the areas of focus and significant risks to be in line with those in the prior year. So there's a presumed risk around management override of controls, which we'll look at, as well as the valuation of land and buildings, investment properties, and also the pension liability. We'll just keep an eye on COVID-19 and the impact that has on the audit. And obviously we discussed some of the impacts that had on the 1920 audit at the last audit committee. That's probably it in terms of audit progress. I did say I'd mention the new approach to value for money, and that's set out on agenda pack pages 16 to 18. So the National Audit Office issued a new code of audit practice, which changes the work that we do on value for money. And in my mind, there's probably two or three key changes to that work, which I'll outline now. So the first of the changes is that you'll no longer receive a qualified or unqualified value for money conclusion. So we don't give a conclusion anymore on the council's arrangements for value for money. Instead, we're required to provide a commentary, and that's probably the second and third changes. So the commentary is issued via a new report, which is called the Auditor's Annual Report. That's going to replace the annual audit letter that you would have received in previous years. And we're also required now to provide a commentary against each of the three key headings, So they're financial sustainability, governance, and improving economy efficiency effectiveness. So under the old approach, we would do some planning work up front, but then focus in on any specific risks that we identified. So last year we had a risk around financial sustainability, but we didn't have other risks under other areas, so didn't provide detailed reporting on that. The change moving forward is that you'll receive a commentary against each of those three areas. So I suppose the summary is you don't get a conclusion anymore, so it's not qualified or unqualified. Instead, we provide a commentary, and it's now reported through a new report, the Auditor's Annual Report. So pages 10, sorry, I don't think it is 10, sorry, it's 16 to 18, set out a bit more detail about what's covered under each of those headings. And also, if we do find weaknesses or issues in our view, the recommendations that we would raise and follow up, and the level of recommendations that we're able to issue. So that is a new approach to value for money. It will look a bit different to what you've received in previous years. So I thought it was worth adding in these slides and just giving you a brief summary of those. The rest of the report sets out some other sector updates. So pages 19 to 21, one of the key audit changes for the 2021 financial year is a change to our auditing standards around accounting estimates, and that places increased emphasis on our work, and also increased emphasis on the work of management, and also your oversight of that as those charged with governance. So there's a little bit more information on the revised auditing standards, and then some other sector updates and reports that I won't go into any detail now, but happy to take any questions on any of those or anything else I've said or that's included in the report.
Well, Councillor Taylor, you have a question.
Yeah, thank you, Chairman. Just could I have some clarification on subsidy, because I mean that's a fairly wide thing, and what do we subsidise? I might have missed that in previous meetings, but the word subsidy is something that's a fairly wide-ranging topic, and I didn't know what we were covering in subsidy. Thank you.
Sure. Yeah. So through yourself, Chair. So the housing benefit subsidy, obviously the council pays out housing benefit to claimants within its area, and the council pays that money out to those claimants based on the information provided by them, and then the assessment that's undertaken by the council as to the amount of subsidy, the amount of benefit, that those individual claimants are eligible for. The council then claims back that money that it's paid out from the Department for Work and Pensions. So that's what I mean by subsidy. So in the council's accounts, you've got the expenditure out to claimants, but also the income from the Department for Work and Pensions to cover those benefit payments. Now, there's differing levels. So if, for example, the council makes an error in the amount of benefit that it pays out to a claimant, the council's not able to recoup all of that money because the department expects that benefits are paid and calculated correctly. So that's what this the subsidy is, and you're able to claim back 100% of the monies that you pay out correctly, but there may be lower amounts of subsidy you're able to reclaim if the council's identified errors in the amount it's claimed. Does that answer the question, Councillor?
Yeah. Does this get covered in our budget? Does it in some way as a fund that's set aside just in case?
That might be a question for Mrs. Buckle.
Yes, I can answer that question, Chairman. Thank you. So yes, when we go on to the last item on our agenda today, the budget book, I think it's on page 111 of today's agenda. Sorry, 114, but we can see the Housing Benefit Payments Cost Centre there. And you can see the payments going out and the level of subsidy coming back in from the Department of Works and Pensions. So our latest estimate for 21-22, we're expecting expenditure just over 14 million. I think it's saying 14,085,000. And our expected level of income back in through subsidy from the DWP is 13.927. So there's a net residual amount to us of about 158,000. So there's a small percentage which ends up as a net cost to the council, and that's the same for all councils. But we do have Mrs. Munyu on the call with us today when we get to the sundry debt item, and Mrs. Munyu is going to explain about the housing benefit process and how subsidy works and how things like local authority error works.
Thank you very much. Thank you, Chairman.
Thanks, Lisa. Thank you. Okay, so members, any other comments or questions so far, please? No? Okay, we can move on. Thanks, Jackson.
Thanks, Chair. So the next item 6, informing the audit risk assessment for the 2021 financial statement. So as I explained, we're currently undertaking the planning work for the audit of the 2021 financial statements. Our auditing standards require us to ask a number of questions of management during that process. This document sets out all of those questions that we're expected to make and request from management. And it also includes management's responses to each of those questions. Yes. It's on your agenda today because as those charged with governance, our auditing standards also require us to ask you those questions. So the way that we do that is that we ask management the questions and they respond. We ask you as a committee to consider the responses we've received from management to ensure that they are in line with your expectations. There isn't any response in there that actually you as a committee don't believe is valid. So it's on your agenda for your information and for you to enable you to raise any comments or queries that you have on the responses that we've received from management in the 2021 audit planning.
Okay. Okay, thank you. I don't have any particular comments or questions. Members? Lisa, do you have anything you want to add or to tell us?
Could I just
Thank you, Jim.
ask one little question, please?
Oh, Councillor Pennington, yes, please.
It's only a small question. On page 33, where it stated that the council has 1.5 billion investment and so on. Because of the, and then earlier on the page, because of this COVID, do the officers feel there's any chance of those deflating as a result of the COVID?
Thank you. Councillor Pennington, so that's around 2 specified investments which we've got. So we've got 1.5 million invested with the CCLA Property Fund, and another 2 million invested with the Diversified Income Fund. We will have a valuation of those funds very shortly towards the end of April. So we will be able to see if there's been any impact on the valuation of those, because we will use that valuation then as part of our close down procedure in the balance sheet. So by the time we get to the draft accounts, sort of around June time, we will have a formal valuation of those funds. I think they may have gone down a tiny bit, maybe 2-3%, but I don't think there's any significant diminution in value of those from what I can see so far of the monitoring results. But these are long-term strategic investments, so the council is not intending to realise those investments or take its money out of those investments for at least another sort of 5 years. They were when the money was put into those investments, their members were quite clear that these were long-term investments and investments which were going to be held for at least 5 to 7 years.
Yes. Okay. Thank you.
Thank you.
Thank you. Anyone else, members, got any observations or questions? Okay, thank you for that. Well, then I guess we need to note that, and also note item 5. I forgot that, sorry. No, okay, now it's over to Dominic for an update on progress on the 1920-21 internal audit plan, please.
Thank you, Chair. I think the leader has an introduction to this report.
Sorry. Smack wrist again. Leader, over to you.
Chairman, thank you. I thought you were going to cut me out of the loop, but that's all right. Thank you. So as part of the internal audit reporting process, the Audit Committee receives updates on the progress made on the current year's audit plan. This is the second progress report for 2020-21, setting out the work carried out by internal audit up to the 19th of March against the audit plan that was agreed by full council back in April last year. Progress continues to be impacted by the COVID-19 pandemic. As reported at February's meeting, the audit team have been engaged at various times during the audit year in providing assistance with the processing of the various business grants, and this has continued for one member of the team, with the other team member able to concentrate on carrying out audits. As a result, a number of audits have not taken place. However, as at the 19th of March, out of the 34 planned audits, 4 were underway, 6 were at draft report stage, and 12 had been completed with final reports issued. In addition, final reports were issued on 8 audits from the 2019-20 plan that were being completed at the start of the audit year. Details of all these are outlined at Appendix A and B. Overall, and based on work performed to date during 2021, internal audit is able to provide reasonable assurance on the adequacy and effectiveness of the authority's internal control environment. Thank you, Chairman.
Thank you, Councillor Pearce. Okay, so Dom?
Just to add a couple of bits, as has already been pointed out, yes, COVID has had an impact since the last report that you received in February. Matt has continued to assist with the processing of business grants, whilst Julie is picking up the planned audits, mainly key financial systems. We have 4 audits with field work in progress as we move into the new audit year, and 1 audit that's still to start. But we're also waiting for a number of responses from officers to recommendations made in draft reports. Once we have those, then we can issue a final version of the report. We've issued 2 final reports, namely the ICT health check and the follow-up to the review of insurance cover that we undertook in 2019-20, and our findings and responses from officers are in Appendix B. Note that both in this report and in the annual plan report that follows, I include all audits in Appendix A that make up the allocated 430 audit days. We've used this approach for several years now. The majority are shared across both councils, West Devon and South Hams, and some may be exclusive to one or other. such as things like Salcombe Harbour and Dartmouth Ferry, and that is indicated below the audit title. Despite this, the intention is obviously for members to approve those areas of the plan that apply to them. I can take any questions that members may have.
Okay, members. Oh, Councillor Spencer, please, and then. Yeah, Councillor Spencer, please.
Thank you, Chairman. Just picking up on your initial comment about PERDA, am I allowed to make an observation on some of the management responses under Appendix B?
Yeah, as long as you don't venture into any politicking, yes, and you look at the, if you like the quality of the work, then that's okay.
Thank you very much. In which case, I'm looking at page 67 onwards in Appendix B, and throughout the management responses, action points have been identified, and some of the action points are residuals from previous audit. This would seem to suggest, at least to me anyway, that some sort of further monitoring of the action points is needed. I note that nowhere in the management responses is there any reference to timescale, at least that I can find, and yet there is a general acceptance of a principle of SMART, of which the T is for time bound, and SMART has a pretty good proven record for effectiveness. And I'm wondering whether each action point that's been identified can carry a timescale attached to it, just to make it a little more meaningful. That's my question. Thank you.
Yeah, if I can answer that, Chair.
Please.
In the audit reports, when we seek responses from officers, we do ask for an estimated kind of target date for each of those. I haven't put those against the responses, but within the actual reports themselves, those target dates will be highlighted.
Okay, thank you. Councillor Brazil.
Thank you, Chair. Just a couple of questions, please. On page 62 of the report, this is the appendix. There's the community housing programme and the report issued in draft. The one below that is the Salcombe Whitestrand project. Anyone reading the Salcombe Whitestrand project report wouldn't understand quite what a major cock-up that was and how much money it cost the district council. Can I be assured that the community housing programme, as well as looking at qualitative, actually looks at, quantifies the amounts of money that have been spent, where they've been spent and what they've produced or not in that case? So that's my one on the community housing programme. And then secondly, I wanted to, well, it's all a bit tricky on the computer. So that is, it's down a few, it's basically about the grants, the lag and the leaf. I see we've already spent 22 days on that. We've come out of Europe now. Those are funded by Europe. We're no longer in Europe. I think we should just stop now. We're not going to give the money back to Europe, whatever. They can't come and claim it off us. So I think we should just stop that and just forget about it. It was always totally disproportionate to the amount of money that was spent, in my view anyway. So any comments on that would be appreciated. Thanks.
Okay.
If I can just make one comment on that, as far as the leaf and lag, we know that the programme has been extended to, I think it is the end of this year, December 2021. Our task is, as auditors, is obviously to check the claims and the expenditure that goes through. As for whether it should stop or not, I don't think I'm in a position to comment.
No, I think we're bound to do the work and get it audited and show what we're doing with the funds. But If anyone else has anything to add, I would appreciate it. Okay, well, we'll move on then.
Sorry, Chairman, it's Dave Fairbairn.
Hello, David.
I think the answer you've given is the correct one. I think ultimately we've received the funds, therefore, as a public body, we're obliged to audit and account for the funds we've received. So I think we couldn't just stop. I think is the point. Thank you, Chairman.
Oh, thanks, David.
Chairman, I haven't got time to put a question in there. Just a point about the leg. I think that money is all allocated. And it's just waiting to be completed. The projects are waiting to be completed.
Yeah, sure. Okay. Yeah. Okay, Dominic, back to you, if I may.
That's all I have to say about the latest progress report. Obviously, there'll be in June, I'll do my annual report that will sum up all the work that we have done during 2021.
Okay. Members, everyone happy that we note and approve the report? Any dissent? No. Okay. Thank you. We'll move on to item 9 then, please.
Once again, if I can hand over to the leader for an introduction.
Oh, have I missed one? Sorry, I've missed 8, haven't I?
8. Yeah, I was going to.
Sorry.
Yep.
Okay.
Right, would you like me to introduce this one?
I would, yes, please. Yes.
Okay, right, I'll do that. The Public Sector Internal Audit Standards requires the Head of Internal Audit to prepare a risk-based plan of internal audit activity that is designed to support an annual opinion on the effectiveness of the systems of governance and internal control within the Council. This report outlines the process followed in producing the internal audit plan for the forthcoming year 21-22 that is set out in Appendix A. The plan is designed to offer flexibility to enable assurance to be obtained over current as well as emerging risks. As outlined in the latest progress report, the COVID-19 pandemic impacted on internal audit's work during the last year. As a result, a number of audits due to be undertaken in 2021 have been delayed and now appear in the plan for 21-22. In addition, the proposed plan recognises the need for increased assurance that controls are effective following the COVID-19 emergency. With the pandemic still with us, the plan may well change and suffer from some reduction whilst audit resources continue to be made available to assist other areas of the Council in COVID-related activities. Every effort will be taken to carry out the audits identified where this is deemed possible, with minimal disruption to officers and key services, albeit using alternative methods and approaches, with the expectation that an annual audit opinion will be provided this time next year. Thank you, Chairman.
Thank you, Councillor Pearce. Okay, so is that back to you now, Dominic?
Yeah, just to say a little bit more, perhaps, just to say that it is this time of year that I present members with a list of audits that the audit team propose to undertake over the next 12 months. I've spent the last couple of months assessing those areas of the Council that appear as a priority for audit attention, following the process set out on page 71 of your papers. The plan's always allowed for a degree of flexibility, as the leader has said, and it's not cast in stone, as the last 12 months has proven. COVID will have continued to affect our work, the plan and the resources available, but I did take the decision to set out what I call a standard plan in terms of the available days. So we stay at 430 available days, and audits that we intend to do and cover, whilst recognising the need to examine the impact of COVID has had on council services and functions going forward. We continue to carry out our work remotely wherever possible, which does bring its own challenges. As mentioned, several audits appeared in last year's plan, and following discussions with senior officers, it was agreed that these remain important areas to look at and therefore appear again in the plan that you see before you. And I'll take any questions.
Okay, thank you. Members? Okay. All right. Well, in that case, I'll ask that we approve the report and the proposed internal audit plan. Is there any dissent? Okay, thank you. We will now move on to item 9. Okay, the shared services methodology. Is that one's yours, isn't it, Lisa?
I think Councillor Bastone may be introducing this.
I've got it wrong again.
Chairman.
Sorry, Councillor Bastone.
Thank you, Chairman. This is an annual report considered by the Audit Committee, which reviews the apportionment of costs, and predominantly staffing costs, between South Hams District Council and West Devon Borough Council. Each year, the splits are reviewed based on the latest caseload data available. For example, the total cost of the housing benefits team is shared based on the number of new housing benefit claims and change of circumstances processed in each council. Our external auditors, Grant Thornton, have identified the sharing of costs between South Hams and District Council and West End Borough Council as a key risk area, and it is given high prominence throughout the year and particularly during closure of accounts. The most significant changes for 2021 relate to waste, the head of commissioning and head of commissioning contracts, internal audit and planning enforcement. In terms of waste, the individual staffing allocations of this service have been reviewed to reflect the additional work created by the implementation of the Devon Line service in South Hams. There are specific splits for each individual post, and the movement in time allocations has increased the salary recharge to South Hams District Council by £23,700 for the year 2021. In addition, the time allocation for the head of commissioning and contracts has also been revised as a one-off for 2021. It was previously 60% stroke 40%. It's now 80%, 20% between South Hams and West Devon to reflect the additional work created by the implementation of the Devon Line service. This has resulted in an increase to the salary recharge to South Hams of £14,200 in 2021. These increases are partly offset by changes in the shared services splits for internal audit from 66/34 down to 62/38 and planning enforcement from 79%/21% down to 75%/25%, reducing the salary recharges to South Hams by £8,600 and £1,800 respectively. Most service areas remain unchanged and below the tolerance level set at 3%. The financial impact in 2021 of these changes in shared service allocations is an additional staffing cost in South Hams of just under £27,500, which equates to less than 0.3% of the council's total salary budget. Thank you, Chairman.
Thank you, Councillor Bastone. Okay, members, any questions or comments, please? Okay, thank you very much for that. Councillor Spencer?
Sorry, I'm just asking whether the recommendation on the screen is actually correct.
Sorry,
I think that would say the Audit Committee note the methodology of the shared services apportionment of costs between South Hams District Council and West Devon Borough Council. Sorry, note the methodology of the shared services apportionment of costs.
Yeah, so sorry, it's okay, isn't it? I'm missing the point somewhere.
Sorry, Chairman, I think it the recommendation originally referred to the next report around sundry debt.
So,
The recommendation as printed on page 79 is correct, yes.
yeah.
It was just the PowerPoint we've changed.
Oh, sorry. Okay, I'm with you. I've been looking at, yeah, okay.
Thank you.
Okay, so members, any dissent with regard to the recommendation of noting the methodology? Okay, thank you for that. We now move on to item 10. And again, Councillor Bastone, I've not forgotten you this time.
Thank you, Chairman. Members, this report gives an update on the Council's sundry debt position as at the 28th of February 2021. The arrears covered in this report are split into 3 categories as follows: sundry debts, housing benefit overpayment recoveries from those still in receipt of housing benefit, and housing benefit overpayment recoveries from those no longer in receipt of housing benefit. Debt recovery was paused in the early months of 2021 following the initial COVID-19 lockdown, but all recovery procedures are now back up and running. The sundry debtor balance has reduced significantly in the last 6 months. The assets team have been actively pursuing unpaid debtor invoices and supporting our customers with options such as payment arrangements. Thank you, Chairman.
Thank you, Councillor Bastone. Members, any questions or observations, please? Okay. Councillor Spencer.
Thank you, Chairman. Yes, just an observation and a question. The initial part of the report refers to the debt recovery action plan and refers the reader to the website. The action plan on there is not dated, so I don't know what vintage it is, but are there any thoughts or considerations that are being made regarding any possible changes to that in the light of COVID, and specifically in the light of people's ability or perhaps inability to make payments as a result of the pandemic? Thank you.
Okay, thank you. Lisa, can you respond to that one, please?
Yes, certainly. Thank you, Chairman. So yes, certainly with regards to the chasing of debt for our sundry debtors, what normally would happen is that an automated reminder letter would go out from the system on a monthly basis, and that would have started around April time. And after there would be a first reminder, then a second reminder, and then at that point it would have moved to recovery action. What we did in April 2020, when the pandemic started, was we didn't send out reminders in those early days, and when we did send out reminders a couple of months into the summer, what we did was on those letters, we gave a range of measures to customers about how they could help with their debts. So it referred them to things like debt advice and ways that, or whether or not they could spread their repayments through instalments. So we changed those letters that went out. They weren't automatic letters that went out from the system. They all went out through mail merge, and we did a specific letter to our sundry debtors saying, we understand it was very difficult circumstances, and please get in contact with the council if they were unable to pay those debts. I think what we can see from the pattern of sundry debts which we've got in the report is certainly we did see around September time the sundry debt level did go up, and then it has come right down around February time. So I think those letters that we've done manually to customers, I'd like to think have helped, and the advice that we've put on our website as well around the government initiatives which were in place to help people as well, around things like bounce back loans and loans that they could access as well. So in answer to your question, Councillor Spencer, we did move away from some of our current procedures in that we didn't do the automated approach. We did a much more manual approach and tailored those letters to the circumstances which we were in. In terms of when would we look to review that policy again, I think that is something we would probably look to do in the next year, and have another look at our debt recovery policy. But I think what we've done is that on the ground we have changed our procedures in that we've done tailored letters to our customers and put ways of, the same with council tax and business rates, we did the same on that as well. Thank you.
Yeah, thanks, Lisa. Yeah, I think that's a really good balanced approach, and you know, I think everyone's got to be commended because they'll have to put more work into it and had to put up sometimes with the debtors going up. But I think it was the only way to do it, and I'm glad we've done that rather than sending the troops in, as it were.
May I come back, Chairman?
Yes, please. Yes.
Thank you. Sorry, I understand the position regarding sundry debt and acknowledge that the marked drop is commendable, and you know, clearly the policies there are working. But when you look at housing benefit, with or without the benefits still being paid, the debts are well, one's come down and one's gone up, but largely overall remain the same. Is the same strategy being applied there? And what are the thoughts about the level of debt remaining outstanding being pretty much constant?
Yeah. Can I just check if we've got Mrs. Money on the call? Because I think Mrs. Money. Thank you. I think Mrs. Money was going to talk specifically about housing benefit and about how the whole subsidy process works as well.
Yes, okay.
Would that be a good point? And then we could address Councillor Spencer's point as part of that as well.
Okay, yeah. So once an overpayment's been created on the housing benefit side, we look firstly at who the payee was. This, along with the reason for the overpayment, will help us correctly classify any overpayments and decide who we need to seek recovery from. If we can recover from the landlord, we can apply the blameless tenant rule. This allows us to recover from another of the landlord's tenants whose housing benefit is paid direct to the landlord. Alternatively, if the landlord is not due any other housing benefit payments, we'll issue them with an invoice. If the claimant's still in receipt of housing benefit, we will recover any overpayments direct from their ongoing entitlement. We use the recovery rate set by the DWP. However, if customers approach us to say that they're suffering financial hardship, we will look to do an income and expenditure and to reduce those amounts and to help the customer out. For those claimants that are no longer entitled to housing benefit, once we've created the overpayment, we will, if we receive no payments within a month of the invoice being issued, we issue a reminder. Again, we took the same approach last year, as in we didn't do the automated letters. We did a softer approach to try and help the customers, to give them advice, to point them in directions of where they could get additional benefits, to help with, if it was housing benefit, with discretionary housing payments if we could. If it was council tax reduction, we looked to award exceptional hardship funds. So we again took that approach that we didn't just go trying to recover the debt. We did personalise the letters and try to assist those tenants. Following an invoice being issued, like I said, if they haven't made any payments or contacted us within a month, we send a reminder out. We only send one reminder. Then the following month, if we still had no contact or any payments, we will look to see what the personal circumstances are of that tenant. So if they are working, we will do a direct earnings attachment letter. We'll send that out to the customer. We'll again give them a month to respond to us. If we don't get any response, the following month we will go direct to their employer to try and seek that recovery. If the claimant is in receipt of benefits, so state retirement pension or universal credit, then we request recovery direct from the DWP. When another payment's created, there's different categories that they're classified as. So if it's an eligible overpayment, that's mainly where the customer's failed to notify us of a change of circumstances, etc. Then that attracts 40% subsidy back from the DWP. So in real terms, what that means is if we can recover that overpayment from the claimant, we can claim 140% on that debt because we'll get 100% repayment and 40% back in subsidy. We also have another classification, which is local authority error or admin delay. Admin delay is where we fail to act upon a change of circumstances that somebody's notified us about prior to the next payment run. And local authority error is where we possibly have made an error in our assessment, in our calculation. Those overpayments, as long as we keep within certain thresholds set by the DWP, we can claim 100% subsidy back from the DWP. So for those, we can get 200% back, because if we can recover the overpayment, we will have the overpayment back as 100% and then 100% subsidy. So therefore, you know, it is worthwhile trying to recover these because we will get more than what the actual overpayment is. And in most instances, when we write off an overpayment, they generally tend to be local authority error. So we're not actually losing any money because we will have claimed back 100% subsidy. So I hope that helps you a little bit. And if you've got any questions or...
I won't pretend to remember it all, but thank you for a very thorough explanation. And it's great to know that you really have got your finger on the pulse. And so thanks, Mrs. Molyneux. I thank you for that. Members, anyone, any further questions or comments, please? Oh, but Councillor Taylor, did you ask your question?
No, not yet, Tom. Chairman, sorry, I should have said Chairman. Yeah, it's just. I mean, that Lorraine has actually answered most of my question, really, but this process takes a hell of a lot of officer time, obviously. And at what stage do we look at it and say it's no longer economic to chase and write the debt off? And can we reclaim that from somewhere?
It does tend to be really far down the line that we will say, right, okay, we can't chase that debt anymore. We've done everything we can. We've done traces, because if they've moved address and we can't find them, then we'll keep doing traces. But we won't write it off until we really need to. But as I said previously, we will have already claimed that subsidy within the year that the overpayment's created. So if it's local authority error that we're writing it off as, or admin delay, then we will have already got 100% of that subsidy back. If it's an eligible overpayment, then we will have got 40% back. So we're just losing 60% if we have to write it off. Yeah,
that's on overpayments, but there's other payments. Yeah, there's other payments that are made that come under this category, and there is non-paying or business rates or whatever the case might be. And I mean, it's a lot. It's just not overpayments, is it? And
on the subsidy, do you mean the subsidy for housing benefit?
Yeah.
We more or less, any housing benefit that we pay out, we more or less get 100% back. There's only a few instances where we can't claim 100%, and that's more around our temporary accommodation, where we claim our our homeless. There is set limits that what we can claim on that, but then the housing department get other funding for that, and then but everything else, really, we will get 100% back. The only area that we might lose benefit subsidy is on the overpayments, where it's eligible, where we can only claim 40% as opposed to 100%. But everything else, we tend to get get subsidy back for it.
Yeah. Sorry, Chairman. I was just referring really to council tax and maybe non-payable rent or non-payment of rent. Does that come under the same heading or not?
No, that doesn't come
well,
under
certainly
that.
not under the benefits, no.
No, no, I understand that.
No, Mrs. Buckle can probably fill you in on any of the other items.
Yeah, no, this report is purely looking at sundry debt and housing benefit debt. It doesn't cover business rate debt or council tax debt. But at the next executive, there will be a write-off report on that agenda, and that will cover things like council tax and business rates and what our collection rates have been for this year.
Yeah, thank you very much. Thank you, Chairman.
Yeah, thank you. Well, yeah, that was certainly. I'm glad that we are sort of thinking of the people who are having difficulties. It always hurts when you don't get your money in, but having said that, we do have to think of the people who have suffered over the last 12 months. So thank you. That's so right. I just need to ask that the Audit Committee note the position in relation to sundry debt if there are no more questions, members. Thank you. Okay, we'll move on to item 11 then, please. Which is on page 10. Who said?
Thank you, Chairman. I think Councillor Bastone is introducing this one.
Yeah, it's Councillor Bastone again. I found the right page now. Sorry.
Thank you, Chairman. Lisa, I wanted to see him struggle for a bit. Chairman, before I do the introduction, there is an error in the report on page 109 under the list of customer service and delivery budgets for 21-22. Yeah. Items, where are we? Items 25, which is senior leadership team, and 26, which is extended leadership team. Those budgets are down to Sophie Hoskin, but they should in fact be down to Andy Bates. Okay, Chairman, shall I proceed?
Yeah, please. Yes, thank you.
This is an annual report considered by the Audit Committee. The report sets out the Council's revenue budget for 21-22 and is split between the four directorates of customer service and delivery, place and enterprise, governance and assurance, and strategic finance. The budget book compares the detail of the budget for 2021 against the budget for 21-22 and provides a clear audit trail of all the movements in terms of the cost pressures and savings which were set out in the medium-term financial strategy and agreed as part of the 21-22 budget process. The budget book also shows any veerments within the 2021 year. A veerment is where a budget is moved from one budget holder to another to better reflect where budget responsibility should be held. Veerments always net to zero. In addition, various minor presentation changes have been made to the 21-22 budget shown in the other adjustments column in the budget book. These adjustments net to zero as they are purely presentational. Thank you, Chairman.
Thank you, Councillor Bastone. Okay, members, any observations or comments, please? Right, well, there's an awful lot of work gone into it, and I would thank Lisa and her team for that. So,
Chairman, can I just say one thing?
Yes, please. Yeah, please. Yeah.
I think when we're getting to some of these items, you know, you're saying their comments, their remarks, and so on. I think it's actually, you know, a credit to the audit team that they've done such an outstanding, fabulous job with our audit, because, you know, when you read the many different reports that are put forward before the Audit Committee, it's very clear that we have a sound audit team in the South Hams. And what we're seeing time and time again with these different reports is good, good level quality audit confirmed over and over again. And so, if we had a problem with audit, I think your audit meetings would be a little bit, different effectively. But one of the reasons why I think members are happy with what's going on is because it's reflective of the fact we have a really strong audit team, and the whole finance and accountancy section in the South Hams does a great job. And I think they should be commended for the excellent work that they do, month in, month out, particularly given, the real difficulties we've had over the last year in management and working and everything else that's gone on. And what we're left with is a really sound, good audit team and a really good audit report. So I can only congratulate them on the success they've had.
Okay. I guess you meant finance team. Not that I'm knocking our auditors. I think
sorry, audit and finance. Yes. Yeah,
that's right. I think Mrs. Buckle can take the message back to her team that it would appear, and I'm not really messing about with words, but yeah, it's brilliant. And certainly once upon a time I'd have been happy with reports like this. And please accept our thanks and congratulations, Lisa, and please pass it on to your team.
Thank you very much, Chairman. Thank you, members. I will pass that back to the finance team. Thank you.
So I will do similarly with to Matt and Julie as well.
Yeah, lovely. Thanks, Dominic. That's really good. And is Jackson still with us?
I am, Chair, yes.
Well, I know we pay you an absolute fortune, but nevertheless, please convey our thanks and appreciation to your team as well.
Absolutely, will do. Thanks, everybody.
Okay, right. Well, it remains then for us to note the content of the budget book for 2021-22.
The leader wants to make a comment.
Comment from the leader, Chair.
Oh, sorry. Right. I've only just spotted it. Sorry. Councillor Pearce, please.
Thank you, Chairman. I just wanted to endorse what Councillor Austin has just said, because I do think that our finance team does an absolutely rock solid job, and better than that, because members are always kept well informed of what's going on. So I would like to thank them publicly for that. As Jackson's still with us, I was going to comment on the external audit report, in that I do think the IFRS are taking the external auditors further and further away from what the requirement of what local authorities really need, and that as a result our officers have to waste effectively a lot of time valuing things that would be important in a private business, because you would be able to offset some of the costs and charges against tax, but they really don't apply in local authorities at all. And my question to Jackson would have been at that stage, and I'm sorry, Chairman, if this is a bit out of place, right. What are the large auditing firms that between them seem to have carved up auditing for local authorities around the country? What are they actually doing about this? And are they making any representations about the IFRS standards? Because it really is disproportionate and really, in many ways, unapplicable to local authorities. And I think we are straying further and further away from what local authorities require, and the needs of local authorities don't seem to be taken into account at all with the way the audit system is going at the moment.
Chair, through you, if you're happy for me to respond to that.
Yeah, please, Jackson.
Yeah. Thanks, Councillor. So absolutely, we've made representations, and to be honest, I would agree with everything that you've just said. I know during the Redmond review, Redmond sought significant representations from all of the audit firms. Grant Thornton absolutely put forward our views, and I would agree that in the public sector, the valuation of the council's land and buildings matters a lot less than it would in a private sector entity. We hoped that the Redmond review would look to change some of that. There were some recommendations made to that effect, but they probably didn't go as far as ourselves or finance professionals, so the likes of Lisa and her team and other colleagues around the country would have hoped. Unfortunately, the council has to produce its accounts in accordance with the CIPFA code. We have to audit those accounts to the CIPFA code, which are based on IFRS and also in line with our auditing standards. So whilst we can all have conversations about the applicability of land and building valuations, for example, under the current framework, professionally, we have to audit to those standards, and Lisa and the team have to produce accounts to those standards. And it's not until those standards change that we can change the position that we find ourselves in. Some of the regulations, so one of the recommendations from the Redmond review was a new regulator. So it was going to be called OLAR. MHCLG have set out their views that actually they don't want to proceed with that approach. So that was a move away from the FRC to a public sector regulator. MHCLG have confirmed that that's not something that they're looking to do. And so we find ourselves in a situation where I think we would all probably agree that the system isn't right or is broken to a certain extent, and certain areas of the audit are focused in the wrong areas, arguably. But until standard setters change those standards, we have to audit to those rules. So it's a frustrating situation, if I'm honest, for all involved. So in summary, we are absolutely making representations, and we did that as part of the Redmond review. But obviously we don't have overall control over those standards, so it's the standard setters who would need to change those standards.
Yeah, well, thanks, Jackson. Anyone else anything to add? Well, it remains for me then to thank Jackson and Dominic and members, and enjoy the rest of your day.
Sorry, Chair, can I just clarify that the last item recommendation was noted?
Oh, yes. Yeah. Oh, yeah. Anyone not happy that we note the content of the budget book? Okay, well, we'll take that as accepted then.
Thank you, Chair.
So thank you, and thank you, Janice, and thanks everybody. And now enjoy the rest of your day.